September may seasonally be one of the worst months for equities, but it's one of the better months when it comes to debt issuance. Global debt issuance set to actually kick off here with at least 40 businesses tapping the high-grade bond markets around the world today alone, with about half those deals already underway here in the U.S. That would make it the busiest day of issuance going back to the start of January. For more on this, let's bring in Josie Joshua, who helps lead our coverage on this. And give us a sense here, Josie, kind of what we're talking about in terms of the breadth of companies that have found an opportunity to come to the market.
Yeah, it's been really wide. There's smaller deals, but pretty big companies. I believe we have BHP today. UBS was also in the market. Philip Morris also in the market. So everybody's just taking advantage of the good vibes we're feeling today, after Labor Day. I believe my colleague Brian Smith just tallied up the numbers. We're at 36 billion in the U.S., and that's a pretty large amount. We usually get that in a month.
Right.
So to see that in a day, that's insane.
Do you have any sense, just on talking to your sources, as the type of appetite, investor appetite there is right now?
Yeah, investors are really eating this up. Like, we didn't have much issuance over the summer. June and July and August, always quiet when everybody's on vacation. So investors were really happy to have all this demand and have all this issuance coming through.
They're ready to put money to work. How much of the corporate bond sales flurry is because of the calendar? We're post-Labor Day, post the summer holidays, versus expectations that the Fed will likely not do anything when it meets in September?
Yeah, so it's a little bit of both. It's a lot of post-Labor Day pent-up issuance. Some people didn't get through in the earlier days of the year when a lot of the bank stuff was going on and yields were higher. So it's some of that, but also people are just trying to get ahead of a lot of this economic data that we have coming through. Issuers don't usually like to sell bonds when that's going on, so trying to get ahead of the Fed meeting, CPI, PPI, all those kind of days.
Yeah, all those event risk type days. What can you glean from the duration of debt that's being marketed right now?
Yeah, so right now it's a lot of shorter tenured bonds, which is really interesting and something that's been going on for most of the year, as a lot of investors are still on the side that Fed will cut rates soon. Not everyone's on that side, but investors are definitely feeling that, and they're hoping that if they have these shorter tenors, once their maturities come up, they can refinance for a cheaper amount.
Well, I am curious too, when we talk about kind of what investors are demanding, the type of yield that they want in order to make these deals worth their while against the backdrop of 5% on a 2-year Treasury yield. And there did seem to be a correlation today between this deluge that we were seeing in the corporate debt space and the sell-off that we saw in the Treasury market.
Yeah, a little bit. So Treasuries actually fell because of all the bonds that were sold today. So I think it's just more of the good vibes still. And I know in Europe, we have our colleagues over there saying that they're going to have to demand a lot more yield over there. But I think here, people are still feeling good and, expecting some good positive stuff out of us.
So you mentioned Europe, issuance definitely picking up there as well. With the economies there weakening, are companies tapping capital markets in the U.S. instead? How are they deciding whether to sell in Europe versus in the U.S.?
Yeah, definitely. We saw a lot of non-U.S. issuers in the markets today. I think it's a little bit of just kind of figuring out what yield is better and what demand is like, and just trying to figure out the vibes of the markets and where everything is going and how beneficial.
You keep using the word vibe. Is that a technical term?
Yeah, honestly, we love the vibes. It's both technical, both Gen Z. Yeah. We can have it everywhere.
Yeah. What have the people that you've talked to mentioned about the vibes so far? I know it's only one day back from Labor Day, but what are they looking for to happen this week as these deals are being marketed? Yeah,
so most of the deals are expected to come this week, and we're expecting 120 billion for the month, and majority of the deals are supposed to come this week. So that's a lot of money if a majority is. Like I said, everybody's snapping them up. Everybody's really excited. I don't think there's a concern about oversupply yet. I think if we get to a couple more days of 36 billions, then we'd be there.
So in terms of the common theme, are the companies, you mentioned a lot of this is going to be investment grade, are they articulating what the money will be used for? Have they said, they're going to put this money to work in a certain way, or is it just for, general corporate purposes?
A lot of them have been general. A lot of them have been general corporate purposes. We did have BHP say they're looking to repay the indebtedness from their acquisition earlier this year or last year. But a lot of it is general corporate purposes. I think PMI said paying back commercial paper.
Yeah.
So it's a little bit of refinancing, a little bit of general corporate purpose.
Just real quickly, I am curious too. Like, I mean, I know there's sort of a window of opportunity here before the Fed gets in the way and maybe reality overall here. But is there any sense that sort of the doldrums that we saw in issuance because of the volatility in rates markets, that might actually be behind us? Even if the Fed keeps rates where they are, we know that they're probably not going to go up another 5 percentage points. Does that provide maybe a little more cover?
Yeah, definitely. I think the 5% really creates demand for investors.
Yeah.
Investors were practically having no returns before last year, so now investors are really there, and issuers want to get that demand while they can. I think the next few months will be interesting and issuance-wise. I don't think they'll be at the levels we're at this month or expected to be at this month, but they'll definitely still be up there.